Hey, welcome everyone. This is our fourth show. Very excited. We're moving along here, and I really hope you enjoyed last week's one, the interview with John Tamney. I know I liked it, but that. I hope I do, right? But I know that wasn't an investing topic, but it is pretty consistent with my overarching theme of the show, and which is really thinking, right? Because if we think about what investing is, I mean, it's really all about thinking, right? It is the act of selection, and also not only select what you buy, but also the select of what you sell. So it's very cognitive, right? So I know my thinking has certainly gotten a lot better with practice and exercise. And John's been a great sparring partner for me over the years, just reading his work and trading emails with him. So and talking with him, like it just so I like to challenge my thinking, and John is really good for that. So that kind of leads me into today's topic, which is Bitcoin. So it's really crypto in general, but we'll call it Bitcoin for advertising purposes. Now, I really dislike talking about Bitcoin, believe it or not, because I'm just so conflicted on it, right? Like I love the Bitcoin purpose. I love the ingenuity. I love that it's trying to revolutionize finance, right? I love finance. I love investing. Like I love that. I love that, like the scale of the ambition, right? To take down or to revolutionize the financial spirit, the financial system. And I like that it's rebellious, right? Like it's like, no, we can do better, right? We don't have to accept this. Like, let's change the world positively. Let's take a positive view of the world and bring it forth, right? That's just such a creator producer mentality that I just love, right? But I really find there's just a lot of bad thinking that comes with crypto as well, right? It's probably because it's so emotional, right? Like these are like revolutionary type of goals, right? They're very, very deep. They're very, kind of hit the core of who we are. And because of that, there's just a lot of emotion around it, right? Just try and argue with people in crypto, and it comes out very, very quickly, right? And because there's so much emotion, right? Because there's so much deep and passion, right? That's the word I'm looking for. There's so much passion behind it. Because of the passion and the emotion, I find that there's just a lot to untangle, right? There's just so many of their thoughts, so many of the thinking in it is just muddled. So I'm going to try to untangle some of that here. And I'm going to break it, I think, into kind of two parts because I don't want to make it too dense. Like it is going to be pretty dense. I know all my stuff is dense. If it's too dense for you guys, please let me know. So yeah. So before we dive in, just want to remind everyone, please, if you could like this, if you like the show, if you can share the show, if you like it, don't share it or like it if you don't like it. But right now, just go ahead, hit that like button. Let's get off on a good foot here. And if you don't like it, just unlike it or thumbs down if it's really terrible, right? You could also follow me on Twitter, right? It's somewhere up here. And I would also recommend you checking out the website and even subscribing to get my monthly emails, right? I don't really spam, but you'll at least get the articles. So that's all on the website as well, integratinginvestor.com. And just lastly, I really want this to be more interactive, make it a little bit more fun, right? And I'm going to try and do a better job of moderating that chat. So please use the chat. Also the super chat, right? If you hit the super chat, again, all the proceeds go to the Iran Center. Help them out a lot. None of it goes to me. So let's please help support them. And I'll definitely see your comments if you use the super chat. And really just don't hesitate to ask any questions if you don't know what I'm talking about, right? I'm a professional finance guy. I've been doing this for longer than I care to admit. I'm almost 20 years. Some of the language and the concepts are just second nature to me. But I respect that they probably won't be second nature to anyone else. So, I want people to, I want to make this, a personal experience. So please bring me back down to earth if I am floating too much. So again, please use that chat. So thank you, Jonathan, already. thanks a lot for your donation. Thank you, Mary Allen, I believe, or Mary Aline. Sorry if I'm mispronouncing your name. I'm terrible with names. So so we have a question from you, and yeah, might as well just take it. So how does blockchain relate to Bitcoin, if at all? So I'm going to get back to your question now. Let's just dive ahead. I promise I will answer it. So without further ado, we know that, again, you think I will get smooth at this, but no, I will not. We have the disclaimer slide, right? Again, these are just my personal opinions. They don't reflect investment advice or anyone else I'm affiliated with. It's for informational purposes only. I'm actually long some crypto. I'm long Bitcoin and Ethereum. So if you think that clouds my judgment, I don't know. There you go. So back to the controls. Yes. All right. We are back. So let's move right along, right? So where's my screen here? Bitcoin, right? So, let me throw this up. So we've all seen this meme that I'm going to show you, right? We've all seen something like this, right? You got the little girl, you got the house on fire, right? Oh, it's burning down, right? The financial services are in trouble. It's burning down, right? It's such a mess, the financial services. Well, Bitcoin fixes this, right? Obviously, right? This is why Bitcoin exists. And it exists. We're fixing big problems here, right? Whether that's problems in the financial system, right? Whether it's problems in the in the economy, right? Bitcoin fixes problems in the economy. Oh, there's legal issues, right? Like the legal system is corrupt or something. Oh, Bitcoin fixes that, right? Doesn't it? Bitcoin fixes everything. Oh, the police are an issue. The police are cracking down. Well, Bitcoin fixes that too, right? Like Bitcoin just seems to be this magic elixir to a lot of people that just solves all problems. And to me, that's just strange, right? I cannot relate to that. I understand where it's coming from, but it's just like nails on a chalkboard to me, right? Because I mean, I'm very sympathetic to Bitcoin, like and crypto in general, like very sympathetic. Like I love finance, I love investing. Like it's fascinating to me. And I see like it's not perfect. Like it has a lot of problems. And now to the crypto community's credit, they generally want to fix these problems, right? They're not making the problems better. Like they are striving for a better world. And to me, that is just so valiant and so worthy of admiration that like I don't like to criticize it. But I see their subjects completely reversed, right? And right? It's like the emotion has completely taken over their thinking, right? Because they want to fix the world, and it's so visceral, and they just see Bitcoin and crypto as this fix. But they're putting, in my view, and I wish over an it is, right? And I wish over an is, and we hear this a lot in philosophy, right? I wish Bitcoin would fix this. I'm going to use Bitcoin and crypto synonymously during this. Sorry, but they just want, they wish that Bitcoin will fix it. And like, I just don't see that. So really, and I think where it comes down is a lot of people see the problems in the financial world as a matter of technology, right? As a tech problem rather than like a political or an ideas driven problem, right? So in my view, like Bitcoin doesn't fix the financial system, right? Rather, it's a decentralization of the financial system that actually fixes Bitcoin, right? And that's kind of the plug here. So before I get in, let me answer some of these questions. So how does blockchain relate to Bitcoin, if at all? That's a great question, and that's a very common question. So how it works is that is Bitcoin runs on a blockchain, in other words. So blockchain is like the technology, right? So what is blockchain? Blockchain is just really it's a huge innovation. It's a decentralized database in a sense. And Bitcoin is just kind of one flavor of it, right? So there is a Bitcoin blockchain that, well, with the maybe big B, where you actually trade Bitcoin small b, right? I guess there could be some discrepancy on it. That that use the kind of Bitcoins on the Bitcoin blockchain. So the blockchain is really the database, and the sort of Bitcoins that we're kind of trading around kind of are let you operate the data, access the database, if that makes sense. So Maria Ellen, sorry, I hope Miss, I'm gonna just call you MA. I hope that helps. If not, hit the chat again and I will try you again. Jeff, thank you. Jeff, thank you for your donation. Very much appreciated. And Fritz too. Any thoughts on Cardano Ethiopian government deal? I'm very sorry. I don't really know what the Ethiopian deal is. Cardano, I'm vaguely familiar with, but I'm going to go over my skis here. I don't know. Maybe if someone wants to let me know what's going on there, I can try and come back to it at the end. Sorry, Fritz, that I couldn't answer your question, but maybe if we can clear this up, then I'll have an answer for you. So going back to Bitcoin, let me show you something else here, right? So why do I hate talking about Bitcoin so much? Well, it's because it's just so muddled with bad thinking, in my view, right? And here is a perfect example. This is a Twitter exchange I had just earlier today, right? Now, I don't know who Dan is. No offense to anyone here, but it's a perfect example, right? Dan has over 200,000, is around 200,000 followers. And what does he say? Bitcoin, more than anything else, is a vote for freedom, right? A vote against the status quo, right? I vote for yourself amidst a world of uncertainty, right? It is, it's like, right? It's like, yes, like there's like I want to get behind that, but no, just Dan, I'm sorry, no, right? What is Bitcoin? Is just a decentralized database. Like that is all it is, right? What is Bitcoin? Bitcoin is a decentralized database. Now, maybe it can be used for other stuff, right? And that's the real hope, right? The hope is that this decentralized database can be used in these amazing ways to make our world much better, and specifically in finance. So these other ideas are just narratives, right? They're just narratives that we tell ourselves. And because there's so much passion, like unfortunately, it's just, I don't know, it's just very fertile ground, like for me on the show. So unfortunately, it kind of comes up every now and then. And like, I hope to cut through some of this, I'll call it nonsense. It's not really nonsense, but it's just sloppy thinking. And why do I even care? Well, because of is ought, right? What do I mean is ought, right? What something is will determine what we ought to do from an investing perspective. So I never want to lose perspective of trying to figure out what things are, because that is going to dictate how we ought to act as an investor, right? Moving on, right? So like the financial system has a ton of problems, has problems, right? Like it is impressive, the financial system. It's this giant industry, but it has problems. Like we all know it has problems, right? It's too big to fail, right? So that in 2008, right, 2009, we have to bail out these companies for their own failings. It's virtually no innovation in it. It's a very archaic kind of product, right? Compare that to like a tech product, like it's just, we're still writing checks. Like, why are we still writing checks? That seems so crazy. And I know like now we're on the credit cards, but in this day and age, it seems very behind the times, and it's a terrible user experience, right? Like it's gotten much better, but it's awful, right? And of course, like above all, there's just recurrent cronyism there. Now, some of it's real, right? Like there's actually real cronyism, but a lot of it is also perceived. Like there's a perceived cronyism, and they feed off of each other. Now, in my view, like the cause of this is centralization, which means the only cure for it is decentralization, right? So I will go back. Sorry, I got a lot of screens to share here today, trying to make it a little fun. It's fun for me. So you've probably all seen some flavor of this this meme before, right? Like, so I just see things differently, right? Like I love DeFi, and what do I mean by DeFi? Decentralized finance, right? That's what DeFi stands for. It means decentralized finance, and I guess we'll get into that a little bit later. So I love DeFi, and I am a huge supporter of DeFi. I'm a supporter of just decentralization in general, right? So, but I think the fans of DeFi have completely lost their. They've just they see crypto, right, and all the potential it holds, but it's completely distracting them from actual DeFi, right? Like I see crypto as a sideshow, right? It's really, I just see it as a distraction, right? It can't truly, right? Like it's worthy of admiration for sure, but it doesn't address any of the root causes of the centralization in the financial system. And like, quite frankly, like it can't, right? Because it just doesn't have the tool set, right? So I think above all though, what crypto fans miss is that, in my view, like crypto's best chance for utility is in a decentralized financial system, right? It's not the other way around. It can't cause a I don't think it can bring about DeFi. Rather, it can really thrive in DeFi. And all right. So that's been a mouthful so far. So just going to make sure I'm going to go in, going on the chat again. Like, again, just use it. Like, I hope you guys are with me right now. Right. So thank you again, Jonathan. Looks like we are cleaning you out today. And MA, thank you. I don't know why you like checks. That sounds crazy to me, but I appreciate the spirit. So where are we? So moving along here. So why decentralization? Why centralization? Like, why is this the cause? Why is this why do I see this as the issue? Why do the crypto people focus on this, right? And it's a great question. It's a big question. It's like what I'm going to focus on kind of the rest of the show, I guess. I'm probably going to run a little bit late, I guess, at this point. So bear with me. But even this centralization versus decentralization, I think is muddled, right? Because a lot of people see it as a number of participants, right? Think about centralization, like Google, right? Google is a giant near monopoly in a sense. Is internet search centralized? Like you could argue yes, but I would say no, right? Because I don't think that like centralization isn't really a quantity, right? A market share issue for me. Rather, it's a description, right? And it doesn't describe the market share. It describes the environment of possible action, right? This is very important, right? It describes the environment of possible action. And another way how I think of this is think about both Rand and Ludwig von Mises talk about this concept of political versus economic power, right? They're different, right? People just talk about power today, but they are very, very different, right? One is voluntary, right? Economic power is voluntary action, and the other is force, right? Political action, right? In economic power, where you're dealing with voluntary, right? There are infinite possibilities for action. So even though Google is dominating the landscape, anyone could come in and compete. As opposed to political power, there's only one possible action. The possibility of action is removed, right? Because you need a license, you need some sort of a blessing, some sort of to compete in the market, right? You have to comply with these onerous laws. So long as the so as long as there are options, right? As long as there are possibilities, like I don't think you have centralization, right? And and centralization versus decentralization is so harmful because it causes you get a lot of hurting behavior, right? A lot of people end up doing the same thing because of a political environment, as opposed to a decentralized environment, right? One of voluntary action, anything is possible, right? So I think you can get, so while you can kind of get centralization without that use of force, right? Without the politics behind it, I think it's just really, really hard because of all that possibility for action. And, like I said, just, I mean, there are very few things that Rand doesn't say great, right? So I'll just throw this up, right? So if you look right here, I'll highlight it and then move it, right? This is from Capitalism, the Unknown Idea. Now let me define the difference between economic power and political power. Oop. Economic power is exercised by the means of a positive, right? By offering men a reward, an incentive, right? An incentive, a payment of value, right? Whereas political power is exercised by negative, right? It's a threat of punishment, right? Of injury. There you go, right? The businessman's tool is values. The bureaucrat's is fear. I mean, just come on, just. She says she has such a way of putting things that you gotta love. So, like, why is decentralization then such a value, right? And well, when we think about systems, right? Because let's talk about the financial system, right? It's really because decentralized systems are simply more stable than centralized ones, right? Think about the old, the forest fire analogy, right? If you let a fire get overgrown, it burns down. Whereas if you have a lot of small fires, right, it keeps things in check, right? Insect colonies, right? We could look at the fragility of insect colonies, and they are just, as they're more decentralized, the better they thrive. You go get like food webs, if anyone is familiar with a food web, and how ecosystems just interact with each other. The more decentralized, just as more stronger the system is, right? Supply chains, right? If you're a manufacturer, right, and you only have one supplier, and that supplier has a problem, like your whole business goes down. Whereas if you have multiple suppliers, it's just more robust. You have one supplier goes down, well, okay, like I have a bunch of other suppliers, right? We'll still stay in business. So, and investment portfolios, right? We diversify our investment portfolios to protect ourselves against unknown risk concentrations, right? So, centralization just breeds instability and fragility. Right. And, probably the work of Hyman Minsky, probably he's probably gotten into this the best, if you are familiar with him. Right. The concept of centralization breeds instability. Right. And we could see this in the financial system. Like, it's not hard. Right. Like, we have the great financial crisis. Right. That was a complete failure of big financial institutions due to this centralization, in my view. You had long-term capital, right? That happened, decade, or about a decade earlier than that. You have the emergent market balance of the early 1990s, right? And then, of course, like, a lot of people don't think about this, but even Wildcat Banking in the early 1800s in the U.S. Now, that's a source of, to me, it shows you the issues of centralization. Now, Wildcat Banking, you look at that and you're like, well, there's so many competitors, right? They're just these unit banks. Like, they shouldn't have, that's not a centralization issue. If anything, they were very decentralized. Well, if you look at the banks, what is Wildcat Banking? They were unitary banks. They were just one bank at a time, right? Banks could not own branches. So their risks became very centralized. So if you were a bank in Nebraska, right, and because you're a bank in Nebraska, all your customers are farmers, right, and they're all growing the same wheat, right, or virtually the same crops. Now, if you have a drought, all your customers are going out of business at the same time, right? They are not growing anything. So it actually made the system very fragile. Which is interesting because that is actually thought of to be as a very decentralized sort of banking regime, and it was in a lot of ways. So it's no surprise that banking is centralized, right? And we see the evidence of it, right, because of how fragile it is, even though it's pretty impressive. And it's centralized because it's so heavily regulated, right? And now the regulations, right? I'm just not anti-regulation. I mean, just to be anti-regulation, I have my reasons for it. But even from this narrow perspective of how does regulation impact system strength, to me, it's so harmful. Why? Well, because the first thing it does is regulation just limits competition, right? They erect these barriers to entry to new entrants, right? And how do they do that? Well, they make it very costly to compete, right? All these compliance regulations and licensing limitations and all these other items are just costs to a business that make it very hard for a startup to come in to subscale and to try and establish themselves. If you're a giant company, like, you love this stuff because you have so much scale that you can absorb those costs within your business. But if you're small and nimble and trying to disintermediate the entrenched players, you just can't do it, right? But probably more perniciously is the behavioral herding that it creates. What do I mean by that? Well, regulations basically coerce companies to act in similar ways, right? They have to optimize their businesses for the rules. They all have the same rules. So those are going to factor in to their business decisions, whether or not they make sense or not. And you could argue, well, maybe they make sense. Well, maybe not. Well, it doesn't matter because they're all playing the same game, and they all have to optimize to the same rules. Now, the Great Financial Crisis was a perfect example of this, right? Banks, very heavily regulated, as we know, hard to get in, right? Lots of barriers to entry, lots of costs. But look at the herding behavior, right? Let's look at what was caused by the behavioral herding of regulations, right? Banks are all subject to these regulatory capital rules. It's probably the most important thing that they have to manage their business against. Right, each company, and they're national rules or international rules. They're all these rules, right? But most banks are kind of playing more or less to the same sort of set of rules, and these rules just gave so much power to the rating agencies, like so much. And I don't even think people really fully appreciate the extent, right? So you have these banks. They own investments, right? That's what banks do. They own investments. And now the amount of capital that they have to hold against these investments as in reserves. So I'm going to go a little quick. Feel free to use that chat if I'm going a little over your head here in banking. They hold reserves. Now the reserves that they were required to hold were actually dictated by the ratings that they had, for example, right? So if you had a AAA, if you had a AAA kind of investment, you didn't have to hold that much capital against it versus if you had a triple B rating. So what this caused between the rating agencies and the accounting rules and the regulatory and just kind of the arbitrage in that, it just created all these risk concentrations. And we saw this in like CDOs, for example, totally lost my train of thought there. But right, in these CDOs, these banks would issue these CDOs, and they would make sure they were AAA rated, and then they would go out and buy insurance on them. And because they were AAA rated, they thought they were fine, right? And they were all backed by housing, right? The rating agencies were like, oh, the housing, because of the way the rating agencies, their assessment of housing risk and the way of the structures, right? The way they assess these investment structures and the way that the regulations pushed all these banks into these AAA rated housing backed securities. Well, I mean, it took down the whole damn system, right? It took down the whole financial system because just getting your opinion of housing wrong was disastrous, right? So we can start to see how like a few favored groups that without skin in the game, like they can really transform some seemingly benign views, like home prices never go down, into very dangerous and systemic risk concentrations. But that, again, I'll just go back to this chat here. If you have any questions, I've covered a lot. I'm going to try and wrap it up in this, very, very, very soon. So feel free to, use that. Thank you for all your questions. I hope you guys are getting some value out of this. It's fascinating. And anyway, yeah. So let's get back to banking, right? So let's think about banking, decentralized banking, and like free banking, right? Like, what if there were no banking laws, right? Just imagine, right? No banking, no regulations, no banking laws. Like, how would bankers act? Would they just be banked like drunken sailors, like burning their money, right? Like, who cares? We're making the loan to anyone, right? Like, no, that's absurd. Like, this image of the conservative banker, especially as we think about, 100 years ago, right? Maybe not now, but that image of conservative bankers, that is a business imperative for them, right? Freed from they need the banking business is based upon their safety. Like, that is everything. So, like, freed from these codified capital like requirements, like, banks would create a whole host of different risk management strategies, right? They wouldn't just, they don't need the regulator to tell them how to manage their capital. Like, there is no greater regulator than the market. And that's actually a line that I'll attribute to John Tamny, right? If they are not regulating their business well, they will go out of business, right? So it is a business necessity to have good capital, good capital stewardship. So without, if absent these banking laws and regulations, like, what would bankers do, right? They need to manage their capital, but they have no rules, right? There's no directive. So what would they do? Well, they come up with a whole range of practices, right, to safeguard their capital, right? And because we'd have all these different banks working on all these different problems, it would just be one giant experiment, right? There'd be a whole diversity of risk management solutions, right? And there'd just be all this experimentation, and we'd have all this data, right? And because we've had all this data and experimentation, we'd have all this financial knowledge about risk management, how best a bank should manage their capital. And because everyone's doing, all these banks are doing different things in different ways. I mean, it greatly removes the risk of systemic collapse, right? There's a wisdom to crowds there that we would get, in a free banking regime. So, my view, it's, crypto's biggest promise isn't to help decentralize the financial services, right? DeFi, right? It is. I mean, it's not to bring about DeFi, right? Like, crypto's promise to me is to help DeFi, right? Like, it can, like, maybe crypto can help bring this along, right? But really, DeFi is a practical solution for crypto, right? Like we don't need crypto we don't need crypto for DeFi, right? DeFi can exist on its own. We just need to get rid of the regulations and go back to free banking, right? This isn't a new idea. Rather, like, crypto, crypto can help, but it's not the underlying issue at all. So going back to our first fun meme, like, this is kind of how I see it, right? Right. Everyone is all the crypto fans, right? It's like, yeah, DeFi, woo, yeah, I want DeFi. Like, let's get crypto. It's like, no, okay, like, you could have, I want crypto. Crypto's pretty good, but, like, it's not like, we need deregulation. Like, that is the issue here. Deregulation, right? We need to get rid of the political power and get back to economic power only. We need to have just a possibility of letting firms compete, which will bring about innovation. And you know what? That probably brings, that'll bring crypto forward if crypto is actually so useful. So I'm going to end it there today. That's a lot to digest. I hope you guys know what's going on. I'm going to go to the chat right now. So thank you, Jeff. So Jeff, no apologies here. Jeff asks, is Bitcoin backed by anything? Don't worry about, we're all learning here, so don't worry about anything else. Don't judge ourselves. Just ask questions. Trust me, there are no bad questions. Is Bitcoin backed by anything? Is Bitcoin backed by anything? I mean, ultimately, it depends by what you mean by backed, right? I don't like that phraseology, right? You had like the dollar was backed by gold. Like Bitcoin is not backed by anything per se. What is a Bitcoin, right? Bitcoin is basically, it's called a token, right? Bitcoin basically just gives you a right to something in the Bitcoin database, right? So kind of, it's not backed by a really, so in that sense, yes, it is backed by something, right? It's backed by it's backed by, I call it like an intangible asset, right? It's backed by a right to a database entry, right? Does that make any sense, right? So, why Bitcoin is thought of as as an electronic payment system is you can assign value to these database entries, and then whoever holds the Bitcoin token, right, the actual Bitcoin, so to speak, is actually, that's evidence of your right to what is in to that money, right? So that is sort of the payment. That's why it's a ledger. That's why crypto has was really envisioned as a payment platform, because it's a database. Like crypto is a database. Or let's just say Bitcoin is a database. It's nothing else. Got a lot of potential, but it's only a database. So yes, to the extent Bitcoin basically is a database, a Bitcoin token that we shortcut as Bitcoin is technically backed by that a right, a spot on the Bitcoin database. So yes, I guess it's backed, but it's not necessarily backed by maybe how we would think of like a gold backed currency, if that makes any sense. All right. Well, we've gone a little bit longer than I usually do today. I know this is kind of, out there. I'm going to probably pick this up again next week. Maybe I'll try and keep it a little bit shorter. That flew by for me, so I hope it flew by for you guys too. Thanks for joining in. Thank you, Jeff. Thank you, MA. Thank you, Jonathan, as always. Thank you, Jeff. Thank you, Fritz, even though I couldn't answer your question. But really appreciate the support. Thank you, everyone. Thank you. Remember, please like the show, share the show. It helps me kind of do what I'm doing. It keeps us all, it keeps the lights on here. And yeah, value for value. So until next week, we'll kind of pick up the Bitcoin, we'll pick up the DeFi, we'll pick up the free banking, and we'll just keep moving right along on our explanation. Have a great weekend, everyone.